what do you see in the real world asset tokenization space compared to 12 to 18 months ago?
The appetite is funny. It's kind of like a weird spectrum, because on one hand, to talk about the RWAs, there's a lot of hype. But with the uncertainty in the markets, I have never seen an investor market situation like this before. You can create distribution rails, but if there are no products that people want, they're useless. We're finally at the stage, in my opinion, where there's more and more products people actually want. We're trying to utilize this new technology to make something that they were having trouble selling better. And the issue with that is if it's not a good product, it's not a good product. But now people are seeing the efficiencies that can be created with technology and taking good products and making them great products.
So it's a pretty huge paradigm shift coming from someone who is actually running a blockchain. So what do you see happening in 3 years, 5 years? Hello everyone, and welcome to the Token City Show. Today we have with us Alon Goren. He is the founding partner of Draper Goren Blockchain, the early stage venture behind dozens, at least that I know of, blockchain and fintech investments worldwide, mainly early stage, with a heavy focus on digital assets and real world assets. Welcome to the show, Alon.
Thank you for having me. I'm always happy and excited to be back.
Thank you. Thank you so much. For my first question, I would like you to tell us a little bit about what you see in terms of investor appetite now in late 2025, going into 2026. What do you see in the real world asset tokenization space compared to 12 to 18 months ago? What feels structurally different now for you?
Okay, so you ask about the investor appetite and then the RWA stuff over the last 12, 18 months. And the appetite is funny. It's kind of like a weird spectrum, because on one hand, to talk about the RWAs, we are there's a lot of hype, not just around the RWAs, but stable coins. And I think that there is more excitement and appetite when it comes to at least public talk than there ever has been before. And it's meaningful because there are projects that are happening that are very real, right? So one of our portfolio companies, Onera, is powering the intraday repo market for JP Morgan. Mm-hmm. That is a multi-billions of dollars a month internal and sort of external product that they do. These are real world assets digitized that trade, again, in the billions of dollars a month that they've digitized, tokenized, and used this technology to speed it up. So people are talking about that. People are actually seeing real use cases where it's making businesses more efficient. And so investors are excited more than ever before. But with the uncertainty in the markets, politics, and everything else going on in the world, I have never seen a investor market situation like this before. I'm not that old, right? I'm 42 years old, so I haven't seen lots and lots and lots of cycles, but I've never had, for example, in November, we were getting messages from other investors who are saying, happy holidays, I'm signing off until January. Come back to us in January, we'll start evaluating opportunities. I have never seen so many people slow down. And I know I always joke about VCs and finance folks who take the whole month of August off or take off the holidays. And I go, that must be nice. I'm a startup guy. I hustle all year long in crypto. There's never close, right? 24/7. And so it's so funny to me to hear this stuff. But like I said, never before have I seen so many investors excited on one hand, but also timid and scared on the other hand. They're not doing deals right now. They're waiting. And I think that everyone is hoping and praying that January, some things change in politics and in markets and we start rocking and rolling. But to be positive, because I'm always optimistic about these things, there's real use cases happening and being announced every single day. And so I think there's really going to be some exciting movement, and investors are in the wings, dying to get into these opportunities.
Yeah, so I suppose that in terms of the potential, the medium term potential, the conversation is very positive, but like you said, let's start talking in January again. So I suppose for our second question. So the companies like Token City are basically in the business of distribution. There's a lot that goes around that, but in the end, what it all boils down to is distribution. I was wondering whether, putting DeFi aside, do you see that there's things that other than that companies are looking for, like maybe, I don't know, yield or diversification, something that really stands out to you other than distribution?
Yeah, well, I think that it's like a chicken and egg problem for the industry, right? Because you can create distribution rails, but if there are no products that people want, then they're useless. We're finally at the stage, in my opinion, where there's more and more products people actually want. So in the early days of an industry, right, I saw it in the crowdfunding space, and we saw it a lot in the tokenization space. People who had a tough time fundraising or who had a tough time building a product would rely on the hype from a new industry to add some bells and whistles and try to make, put lipstick on their product and make it look better, right? Like that saying, right? Putting lipstick on a pig or whatever, right? So people were trying to utilize this new technology to make something that they were having trouble selling better. And the issue with that is if it's not a good product, it's not a good product, right? But now people are seeing the efficiencies that can be created with technology and taking good products and making them great products. Instead of taking bad products and making them okay products, now people are finally there because the costs have been driven down. It's been more vetted. People trust it more, and so you're seeing yield-bearing, money market funds and things like that be tokenized. You're seeing things that even aren't sold in a public setting, but are sold in a B2B setting, like those intraday repo markets, bank-to-bank transactions from day to day. You're seeing those things done. And as we've learned in every single consumer electronics category that I can think of, it starts in the workplace. It starts B2B and then it expands. We all had to get email for work before we got email at home. Once we realized how amazing it was when we used it at work, we all wanted to get computers at home, right? And that's how it happens in general with almost every category in consumer technology. And that's what's happening here. So there's more and more products. And the issue with tokenization, the biggest standalone issue is, or has been, that when a good product is created, it exists in a silo, right? And with public markets, at least, that's not how it works. If I want to buy a share of a stock on a certain stock exchange, I don't have to withdraw funds from my current exchange or from my bank, set up a new account somewhere else, move my money over there and buy a share of stock. I go into my Robinhood account or my Schwab account or my Fidelity account, and Fidelity or Schwab or Robinhood connect via a few technology companies to either their clearinghouse or direct to an API that gives me access to purchase those shares at whatever place I want. Robinhood doesn't individually API connect into the Deutsche Börse and the London Stock Exchange and the Nikkei, right? They use a service, their clearinghouse uses a service and does it. So those services didn't exist until recently in our space. And even now, Onera exists, but only with the companies and institutions who've connected. As far as I know, Onera and that Fin P2P network that they utilize, that orchestration layer to connect liquidity across institutions, it is winning in terms of the number and groups of institutions like JP Morgan and so on using their system. But until lots of others start using systems like that, the liquidity isn't going to work. And without the first part that I mentioned, quality products, nobody's going to need the liquidity. Then nobody's going to need the distribution.
Yeah.
Right. Because until you actually want to buy my product, it's not a problem for you.
Yeah.
And so, but now there are more and more products. And so there's more and more reasons why a bank should connect to a network like this, because they don't want to lose their customer.
Yeah.
Before, they weren't losing meaningful amounts of customers to tokenized asset projects, right? They weren't having millions and millions of dollars leave their ecosystem. Now they will start to have that if they don't connect to these networks.
Yeah. Absolutely. You know, the fact that there's so much, the irony with the blockchain space is the huge fragmentation. Blockchains everywhere, layer twos, tokenized deposits, stable coins. It's just like an absolute mess in that regard. And the fact that we can, you know, we can have a large concentrations of product, which is awesome, but it starts to be kind of meaningless if it's all completely fragmented. So absolutely agree with your assessment there. And I was also, now that we are talking about, you know, the opportunity cost of asset tokenized or not, what do you think of the Nasdaq proposal to tokenize post-trade acquisitions, purchases by investors? I mean, it's a kind of prudent first step, and it seems like the intent is to basically nullify those tokenizations that are going on where there's no rights attached to the assets. But it, you know, even if that's the only reason, I mean, it's pretty nice, no? But do you see that going, I don't know, farther down the line? Do you think they would at some point want to tokenize the whole cycle rather than only post trade? What do you think about that?
I think that I think it's great, right? I think that if you think just a few years ago, right? Mm-hmm. And what's funny is it's not even that long ago. 10 years ago, we weren't streaming movies. Like, think about that.
Yeah.
And now none of us have cable. Like it's wild. And you go 10 years ago and we were e-signing documents, DocuSign or DocSend or whatever. There was different ones, Sign Now, whatever. Mm-hmm. And if you would have asked us back then, are these documents digital? We would have said yes. Yeah. But our idea of digitization has shifted so much. And with tokenization, what I'm seeing is it's an evolution of digitizing these things. Because if you ask most people who buy a share of stock, is it digital? They go, sure. I don't get a piece of paper anymore. I don't even have to pick up the phone to ask somebody to purchase it. I literally just go online, I buy a share. I go on my phone and I buy a share in the middle of picking up my kids from school or you know, whatever you're doing that day. And so it's digital. Mm-hmm. But the tokenization side attaches the rights, attaches the provenance, attaches any kind of extra data you need to it, and then creates opportunities for efficiencies like distributions and things like that just don't exist in the current digital setting that we have. Mm-hmm. And so I think it's just making markets more and more efficient. And what we've learned is that when you make a market more efficient, you make it cheaper and easier for people to purchase. So that creates more opportunities, more volume, more transacting. Mm-hmm. But also you make it cheaper and better and easier, and things just get better. And so I'm a big fan of all of it, obviously. Mm-hmm. I have a feeling that over the next few years, we'll stop calling it tokenization at all, unless maybe we're talking about it from a technical standpoint. I think it's just going to be a part of the tech stack. And we're not going to say blockchain as often as we do now. You know, it's going to be like, think about how many technological protocols exist for us to have this moment right now. You're on the other side of the world. We're doing this digitally. I'm using one computer that has one operating system that's in one browser that uses multiple programming languages, and you're doing it too. And you might be on a totally different operating system on a totally different type of computer. You're using, you know, all these different interfaces than me, and we're coming together. We, you know, and not a single one of our friends could probably explain the intricacies of that.
Yeah.
Maybe one or two, because we hang with a lot of nerds. So I think that these markets are going to do the same thing, and the more we tokenize them, the more you can digitize and automate the processes, the better it's going to be for all of us.
Yeah. It's like, imagine people saying, instead of saying I'm sending you an email, saying I'm sending you a TDP, TCP protocol message or something like that. It's going to be something, I totally agree with you, something along those lines. We are going to stop talking about the technology. Yeah.
If you're old enough and nerdy enough, and I'm not even really that old enough, but I looked over my brother's shoulder when he did it, and he was even a little young for it. But there was a way to log into BBSs, bulletin board systems, when you're younger, with your modem. And if you were lucky, you would know somebody who had 2 phone lines that you could log into his BBS. And what would happen is that then 3 people, the person whose home it was, could be online, and then you, and then 1 other person could call on the other line, and then 3 people would be in the same system communicating at once.
Yeah.
That was a big deal.
Yeah, no, it was, with the dial-up phones, like, disconnect, I have to call someone, stuff like that. Yeah. Not so long ago, to be honest.
No. So your mom picks up the phone and ruins the whole thing.
Exactly. So to continue a little bit on the fragmentation side of things, I don't know, I think you probably saw that IOSCO released a paper lately, maybe a couple of weeks ago, 3 weeks ago, on tokenization, and they were basically extolling all the virtues that we know about blockchain applied to the financial system, but they were like the big thing that they were focusing on was virtual, specifically fragmentation, right? So it does seem like you were saying, we now have the building block to go beyond that, which is pretty awesome to see. So in that regard, what do you think is going to happen, say, in the next 3 to 4 years in terms of fragmentation? Is it, for example, I don't know, Securitize is launching its own blockchain, but do you think companies are going to still try to have their own walled silo? As far as I know, well, I can't name the company, but there's blockchains that are saying, the value is no longer in having assets in your chain. It's actually the ability to connect to everybody else, to your chain, inwards and outwards, right? That's the value. So it's a pretty huge paradigm shift coming from, someone who is actually running a blockchain. So what do you think? What do you see happening in, like, I don't know, 3 years, 5 years?
I think that obviously, like, when new industries are created, the greatest part about it is the decentralization, all the different groups and pieces of the puzzle, right? But at the end of the day, everyone will gravitate towards, usually everyone gravitates towards the most adopted ones for various reasons. Sometimes it is the best technology, sometimes it's the best user interface, sometimes it's other incentives, other reasons. But whatever it is, I think that the industry will consolidate around a few main ones. There obviously can be a long tail of all sorts of niche players and markets and things. Mm-hmm. And I think what we discussed before, those orchestration layers, mm-hmm. the ways to intercommunicate between the different products and pieces are going to be extremely important and relevant. So, I don't know for sure what will happen over the next 3-4 years. Of course. But I think what will happen is the institutions will do what they do. Mm-hmm. The smaller players will probably have to follow suit, regardless of if there is a better piece of technology out there or not. They're going to have to go where, the distribution and the money is, and who knows, right? Like, I think there can be purpose-built blockchains that are very, very valuable for certain types of products and markets.
Yeah.
And I think that if they have products that the public wants or that people want, people will find ways to interconnect with them and move forward. And I think that exactly what we were saying before is, I think I probably told you this last time when we had our thing, but I used to have a slide that says nobody starts an internet company anymore. And the reason I say that is because every company is an internet company now.
Yeah.
And same thing I think will happen with blockchain, right?
Yeah.
In 5 to 10 years, most of the time, people will not be starting a blockchain company, but most companies will be connecting to the blockchain, right?
Yeah.
I think we're going to go into a stable coin economy that's going to make things more efficient. And when that happens, does that mean Circle's gonna be the most powerful player, or Swift will have to adapt? Maybe and yes. But will JP Morgan just launch their stable coin and take the whole market from everyone? Maybe also. And dwarf what Circle is doing. Or acquire them or work together. We don't know that side of it, but I think we will be more efficient, and you can follow the big players. And unfortunately, as much as in the DeFi and crypto space, we wish we could completely circumvent the big players and create a whole new system that's more fair and better. But those guys have legacy and have wealth and weight that they'll throw around. And, I always talk about Tezos. I love Tezos. Technologically, it is one of the best blockchains, if not the best there is. Are they the most adopted blockchain? No.
Yeah.
Is it because their technology is bad? No. It's better than pretty much everything else. So why? And it's because it's not always the best technology that wins the game.
Yeah.
It's timing. It's again, there's a saying we used to say in crowdfunding: nothing attracts a crowd more than a crowd. And there's other things to consider. So will the best DeFi products with the best technology be the winners? I hope so. Will they completely circumvent the banks? I wish, but probably not. But will they make the banks and institutions compete with them so that we and our moms and our dads and our sisters and brothers get better products? Yes, for sure. And that's great.
Absolutely. You mentioned now stable coins, so I thought it might be a good time to mention that. So yeah, stable coins are growing like crazy. They are becoming extremely relevant. They are a perfect fit for tokenized asset trading. Everything is on chain. It's perfect. But I am recently seeing a lot more noise about tokenized deposits, especially after the Genius Act in the US.
Yes.
Yeah. And, it's very early days. It seems like here also interoperability is going to be like the very first obstacle, like large scale obstacle to tackle. But I'm curious what you think in terms of how relevant you think they will be, because if you're not a bank, probably a stablecoin is what you're going to want and need. But for clients of banks, so to speak, using tokenized deposits seems very efficient for the bank, right? It's in the bank's balance sheet. They don't have to have stablecoins and so on to cover for the value of the transaction. At the same time, there's going to be, central bank digital currencies, wholesale used by banks. So, there's like this onslaught of infrastructure that is coming. And the same exercise, you're absolutely right. We don't know if, JP Morgan or whatever, we don't know what is going to happen, right? But if you had to play a little bit of imagination game again, what do you see, or what would you like to see going forward with these different elements?
Wow. What I see and what I would like to see are probably very different, because I'm like a punk rocker that wants a utopia and a freedom, and that's why I got into this space. But I think joking set aside, it's the Genius Act really created something we're not seeing yet, but in the institutional side of things, with legacy companies, right? People do not get fired for continuing the status quo, right? And so they've been watching us, but they cannot risk reputation and their jobs to do something innovative until the wave hits them and the public wants it, or they kind of are forced to. And that's where we are in I think the institutional adoption phase. They all need to do something, even if it's just performative, to participate in this new industry. But I think the Genius Act created an opportunity where they're actually going to see how it can increase their margins very quickly and easily. And it's very cut and dry. It's not, let's adopt this new technology and experiment and maybe something will change, right? Genius Act says that for every dollar you hold in your treasury, whether that's $1 in US dollar or even US treasuries, that's the important part. If you're holding treasuries in a treasury, you get issue a stable coin per dollar in treasuries you're holding. Now, if you think about that, you're earning even minimum amount on US treasuries, 2-3%, right? If you issue a stable coin and you put it into something that's not risky, like a US dollar pool or something online, where it's $1 on one side, $1 on the other, so there's no impermanent loss, and there isn't risk, right? And there is risk, but there isn't risk. You could earn 2-3% pretty easily. Now you're taking something that the treasury of almost every company that holds a large treasury is doing, right? They're going, we have dollars, but we're not allowed to, we can't get risky with it because we need to run payroll, we need to pay for operation, we need to do things. So we buy treasuries, earn a few percent. And now you're saying, thanks to stable coins, you could double the yield of your idle capital. And certain industries will benefit for it a lot more than others. As an example, we incubated one of the fastest growing mortgage companies in America. It's called Lit Financial. They're launching a product called Lit USD. It's not consumer facing. It is a treasury management tool that will increase the yield that they earn on their idle treasury. Because as a mortgage company that services loans and does the things that they're going to start doing, they're going to need to hold a large treasury. And if that increases their margins, it means they could provide better products at a better cost to consumers, and then their company will grow and it will be better. So as more and more people figure this out, more institutions figure this out, or the larger they are, the more lucrative it will be, it's going to get adopted more and more and more. So I think that, that's just one example. And there's tons and tons more around payments and remittance and all the other things that we talked about, where stable coins will really, really, really make markets more efficient.
Sure. I would love to ask you a few more questions, but we're running out of time. So just one last one. When I was researching for this interview, I read that you had participated in above or around 60 deals. Is that more or less accurate, or is that an exaggeration? Yeah.
No. So I would say it's true, and it's if you think about it, like 60 deals. I don't have 60 portfolio companies directly per se, but for example, when we do a portfolio company, then I might participate in their next round of funding or lead their other round of funding. So I mentioned Onera earlier. I was literally a co-founder of Onera. And then through DGH and through my Draper Goren funds, we invested in them multiple more times and led other rounds of funding and participated in other rounds of funding. So that one company might have equaled 5 of those deals or something like that.
Okay.
But I think I'm at Man, I gotta get a new tally. We'll do a new tally, but I'm somewhere near 50 portfolio companies now. And I think that's pretty, I feel really good about that. There's crypto groups that used to do tons of deals, like they do 10 a month. We never did that, right? We always were early, and we put we get our hands dirty, and we do kind of, we want to make sure we can scale and give every one of our portfolio companies the time and effort that they deserve. And so it takes time to do those kind of things. And we've been grinding for many years. And we mentioned that markets were tough for fundraising. Those are the best times for us in terms of doing new deals and getting to meet the greatest entrepreneurs. So we've been having a lot of fun.
Yeah, I bet. We just ran out of time. Alon, I would love to keep talking to you, if not today, because we don't have time. Hopefully you will come back on the show. It's a real pleasure to talk to you.
Thank you so much. Anytime.
Thank you. Take care. Bye-bye. So this was all for today. Thank you for tuning in, and see you next time. Bye-bye.